With me, a long-time managing director, one of the largest private equity firms in the world, Bain Capital, Stephen Pagliua. Great to have you on NDTV.
Great to be here.
Okay, my first question is going to be about investments in India. Everyone's talking about the fact that the BRICS story is dead. India has committed economic suicide over the last couple of years. What does a foreign investor like Bain Capital make of that?
Well, first of all, I think you have to have a long-term perspective. You know, those are stark words. You have to have a long-term perspective, and you've seen incredible progress and growth in India over a long period of time now. I think you're at a point where they've got to continue to improve corporate governance issues, rule of law in terms of business law. If you do that, I think you can go to the next level. So you've come a long way to unleash that entrepreneurial spirit. You've got amazing people, amazing education system, and it's amazing how far it's come. But to get to the next level, you've got to address those issues from a policy standpoint.
You know, Bain Capital was aggressive in India just a few years ago when you said you'll average an investment of $200 million per year. Now, obviously, that has slowed down. Private equity in India itself has slowed down. So we were talking about in 2012, $9 billion. Now, in last year, 2013, we were talking about $5 to $7 billion. And now, in 2014, do you think it will come down even lower?
Well, it's interesting. From a Bain Capital perspective, we have a Pan-Asian fund. So our team in Asia works in India, it works in Japan, it works all over China, and also Australia as well. So we don't tend to set a target per country. In fact, that's the whole reason we have a Pan-Asian fund, because there are different cycles in different countries, India, Japan, China, etc. And so our team is flexible and can go where there are good investments. So there's really not a target per se. We look for transformational growth in anything that we do throughout our whole Bain Capital practice throughout the world. We're trying to transform companies, find ones we can really improve, both strategically and from a growth perspective. So whatever happens, happens. Obviously, India has had some issues with these policies, and the growth has slowed down. But again, it's an equation here. If the growth slows down, it just means more reasonable prices. If you step back and look at, go to Davos 5 years ago, I think there's been a little bit of a change in mentality. There's a huge crisis in Europe, the United States, 5 years ago. There was a holocaust over that, and there was a real euphoria about all the emerging markets, all the new economies in the BRICS. I think 5 years later, the United States has made a lot of progress. There's been oil and gas finds, low-cost energy, driving great economic growth and a turnaround. And the banks are about as strong as they've been since 2008, and maybe as strong as they've been. Europe, same thing, a little slower on the banks, but progress in Europe. And there's just been a more realistic view of the emerging markets. And that's actually helpful for investment, because you don't want to pay a huge multiple based on euphoria. You want to pay it based on really transforming businesses and having growth.
So you even feel the rupee depreciation in India is actually helpful for private equity because the rupee has fallen to a certain level? Because the criticism so far has been that people like yourself, Bain Capital, don't make money in India. Even if they stick for 5 to 7 years, they lose rather 30 to 40% than they would elsewhere, so in China or any other emerging economy.
Well, obviously currency is a huge issue wherever you invest outside of the United States, certainly for our funds and all the private equity funds. But if you're going to invest, you've got to have the ups and downs of currencies. And private equity, the great thing about it is it has a 5 to 7 year perspective. So there's going to be a normalization. The bigger issue for countries like India and countries that have whipsaws in currencies is it's not good long-term for an investment climate. You want your currency to slightly appreciate, or at least stay stable, so people can invest and kind of make the money they thought they would make. So again, that comes back to governmental policies. It's the same in the U.S. with our currency. If we get a path to balance our budget, we get a path to get our fiscal situation under control, our currency will be stronger, and it'll be an even better investment climate for everyone. Now, the beauty of private equity, again, is you're not buying a stock, having it depreciate with the currency, and then selling it 1 year later. It's a long-term perspective. So I think private equity is hoping, in the long view, India, with its 1.2 billion people, the education system, the policies that will be put in, that the currency will normalize at some point. For now, with the currency down, and it can only go so far down, it's probably maybe actually less of a worry for many private equity firms, because it is hit a low level. And if you were a timer, which we're not, you're buying it at a lower level certainly than you were a couple of years ago.
So governance, to your mind, is a bigger issue than the rupee depreciation. And that brings me to the question that, does India need a more decisive head of state or a decisive government, and that's been a criticism which has been hauled over the previous government of the last term. So whether it's the Congress or the BJP that comes into power, investors like yourself do not want to see arbitrary laws. I know Vodafone still has left some scars there.
Yeah, I think private equity and Bain Capital sure doesn't have a position on any political party or any domestic issues. Our real position is that countries that are very receptive to investments, that put in a good system for rule of law, have transparency, have international accounting standards that are implemented, they are hotbeds for investment because everybody can see what's going on. You can invest your money. You can measure that. You can have recourse if things go wrong. So the more emerging markets and the more countries like India can do that, whatever party's in power, it's going to be great economically for the Indian people and for the world as well to harness all that commerce and all that human capital that you have there.
Okay. Investments in India include the Himadri Chemicals, Hero Honda, which is a big one, and Genpact. You're happy with all of them?
We have great management teams in place and making progress. It's obviously, with the currency and everything else, there's a lot of ups and downs. The beautiful thing about private equity is it's a long-term view, and we have long-term strength in those companies, and we'll see that come to fruition.
I'm going to ask you about another investment that you recently made, and in fact you're testing it out, which I like from a private equity investor's point of view. That's Canada Goose. I believe this is the parka that you're wearing, and you just invested in them.
Absolutely. I tell you, honestly, God, it's the first time I've been warm in Davos in 7 or 8 years here.
We all need that, really.
And it's incredible. I have so many people come up to me in Davos and say, wow, that really looks like a great coat. So we're very excited about that investment. Our retail team, led by Josh Beckenstein and Ryan Cotton, made that investment with a wonderful entrepreneur who wants to grow and build the company. It's a perfect platform for Bain Capital to help that wonderful CEO and founder. And I have to tell you, I personally am very, very happy that I'm warm in Davos this year.
I would be too, and I think I need to get one of those for minus 25 degrees Celsius. Next time
definitely.
around, that's what we are getting. But Stephen Pagliua, thank you so much for speaking with us.
Thank you very much.
It's a pleasure.
Great to be here.